Robinhood, the app that brought commission-free trading to millions, just launched its own blockchain. And it's not just another testnet. This is a full public mainnet, with stock tokens, DeFi lending, and AI-powered trading. Here's why this changes the game. On July 1, 2026, Robinhood Markets announced the public mainnet launch of Robinhood Chain, a permissionless Layer 2 blockchain built on Arbitrum. The event took place in London and marked the company's biggest move into decentralized finance. Robinhood first announced plans for its own blockchain back in June 2025. CEO Vlad Tenev called tokenization a freight train coming to financial markets. By February 2026, a testnet went live at Consensus Hong Kong. Now, just 5 months later, the mainnet is here. So what is Robinhood Chain exactly? It's a Layer 2 rollup on Ethereum using Arbitrum technology. That means it processes transactions in batches to keep fees low and speed high. It's designed specifically for financial services and tokenized real-world assets. And the chain is already live with big-name partners, Uniswap, Chainlink, Alchemy, and BitGo. This is not a walled garden, it's a permissionless network. Developers can build on it using standard Ethereum tools. The headline feature? Stock tokens. Robinhood is rolling out a new generation of tokenized equities, available through Robinhood Wallet in more than 120 countries. Eligible users can trade 24/7, directly on Robinhood Chain. But these aren't just tokens that sit in your wallet. You can use them as collateral in DeFi lending pools, or supply them to protocols like Uniswap, Rialto, Lighter, Arcus, and 1inch. This is TradFi meets DeFi in a way we've never seen before. And they're not just available inside Robinhood Wallet either. Third-party wallets like Ledger and Trust Wallet can hold them. That's a huge step toward true self-custody for tokenized assets. But wait, there's more. Robinhood also launched Robinhood Earn, a decentralized lending product available to eligible US users directly in the main Robinhood app. You can lend USDG, Robinhood's dollar-backed stablecoin, through a self-custody wallet. The estimated APY? 7%. And it's insured. Robinhood has procured coverage through Lloyd's of London and RELM to protect against cyber attacks and smart contract exploits. That's a level of protection rarely seen in DeFi lending. Under the hood, Robinhood Earn uses the Morpho protocol as its lending infrastructure. Morpho is a decentralized lending platform built on Ethereum. So Robinhood is essentially wrapping a DeFi primitive in a user-friendly, insured product. And for the traders out there, Robinhood Wallet now supports perpetual futures via Lighter, a decentralized derivatives exchange. Eligible users in select jurisdictions can trade perps directly from the wallet. Lighter even committed $11 million worth of its LIT token to Robinhood users. Users earn points toward that allocation at 2x rate when trading through the wallet versus Lighter's own app. A clear incentive to keep activity on Robinhood's chain. Robinhood also introduced agentic trading, AI-powered trading agents that can execute strategies on your behalf. The press release calls it agentic trading, think automated bots that trade based on your parameters, but built into the wallet. All of this is happening as Robinhood's crypto revenue took a hit. In Q1 2026, crypto revenue fell 47% compared to Q1 2025, pressured by a broad sell-off in digital assets. But the company's overall business is still growing. Total revenue rose 15% year-over-year to $1.07 billion. Assets on the platform grew 39% to $307 billion. And in 2025, Robinhood reported total net revenue of $4.5 billion. So despite the crypto downturn, the company is expanding aggressively, and blockchain is the centerpiece of that strategy. Robinhood now serves nearly 28 million customers across 38 countries and 3 continents. The chain and stock tokens are clearly aimed at building a larger non-US user base, while tying traditional market products to blockchain infrastructure. Johan Kerbrat, Robinhood's SVP of Crypto and International, described the strategy as combining established financial products with blockchain-based markets. The goal is to make tokenized stocks as easy to trade as any crypto token. But there are restrictions. Stock tokens are not available in the US or to US persons. They are also restricted in Canada, the UK, Switzerland, UAE, and sanctioned jurisdictions. This puts Robinhood in direct competition with Coinbase-based blockchain. Both are Layer 2 solutions on Ethereum. Base uses Optimism, Robinhood uses Arbitrum. Both are trying to bridge traditional finance and crypto for the masses. And the timing is no coincidence. With the US regulatory environment still uncertain, Robinhood is betting on international markets and tokenized assets to drive growth. The chain gives them full control over the infrastructure.